And there you have it, the closing bell from the New York Stock Exchange, a day now after President Biden's State of the Union address.
The Dow Jones ended the day in the red, down a bit more than 200 points. The S&P 500 and NASDAQ also ended the day in the red. Everybody feeling exhausted from Wall Street to Main Street. S&P 500 down roughly 1%. The NASDAQ is down about 1.5%.
So what does this all mean? Dan Geltrude joins us. He's the founder of the accounting firm Geltrude and Company. Dan, we expected sometimes a president's State of the Union address can have an impact on sentiment on Wall Street. Would you attribute today's drop to what Biden said yesterday or something else?
Well, I think it's always a combination of factors. I think if we actually go back just a little bit now to that stunning jobs report from last week, 517,000 jobs added, which no one saw coming, by the way.
Right.
Now, we would say, hey, that's good news. But the other side of that, as it affects the stock market, is the Federal Reserve looks at that and says, you know what? Things are still running hot, which means we have to keep raising interest rates. Now, the stock market doesn't like that. So I think before we even get to the president, we have that looming. Now, if we talk about what the president said in the big picture, at least from what I heard a lot of talk about spending, right? That's not a great sign for the stock market. And I also heard some talk about taxes, specifically related to corporations. Another thing that the stock market generally doesn't react too kindly to. So I think it's a combination of those things of what we're seeing today.
Oh, that makes sense. You listened to the president's State of the Union speech. What really stood out to you, and what implications do you think those messages might have for investors?
Well, here's what's interesting as it pertains to investors. So the president talked about how there's not going to be any cuts to Social Security, and everybody stood up and cheered. Okay, great. Nobody wants to see Social Security being cut. But that also means there's probably not going to be a lot of cutting anywhere in the federal government, right? Because if these types of obligations that the government has, which keep increasing and increasing, are not going to go down, well, if you're not going to stop spending, that means you're going to have to tax more. And I think that's really problematic. And that, again, that's what really stood out to me more than anything beyond the politics of the speech.
And there's one more data point, Dan. I mean, we do expect there to be another interest rate hike. We heard from the Fed governor, Christopher Waller, who's warning now that they may go higher than expected. What do you make of that? And based on what Mr. Waller is saying, what should we all expect?
Well, I think the expectation across the board had been another quarter point. Now, I think that's what the stock market is baking into the mix here. Okay. Now, if they go higher than that, then I think you're going to have a little bit of shock waves hitting Wall Street. And the stock market has been this has been very, very problematic for the market.
All right, Dan Geltrude, obviously a lot of things to watch and look out for, and we're appreciative that you're doing so. Thanks.
Thank you, Dan.
Thank you.